Good afternoon, everyone. My name is Sangeet Paul Chaudhary, and I will be your host on this panel on the Great Rebundling of Finance. And this afternoon, joining me on this panel are three leading players from the world of financial services. We have Mike Wells, CEO of Prudential, joining from the US. We have Tony Fernandez, the CEO of Air Asia, joining in from Malaysia. And we have Jon Lambert, the Chief Digital Officer of MasterCard, joining in from the UK. Gentlemen, welcome to this panel.
Thanks, Sanjeev.
Great. To kick this off, I'll just start by talking about the idea of rebundling to some extent. When we think of how the digital economy has played out in a few other industries, and we're seeing similar things playing out in financial services over the last several years, we've seen cycles of unbundling and rebundling playing out because of digital technology. So if I just take a couple of examples, in the news industry, the newspaper used to be a bundle, and then it got unbundled because of digital, and each individual news article could be transmitted over the internet. And that content then got further unbundled from advertising. And eventually, business models were created not around unbundling, but around rebundling, either through a search engine or through a news feed where these news articles were rebundled in the context of the consumer. And we saw the same thing happening to some extent in music, where the album was a bundle and Gaza and Napster file sharing unbundled it. The money was not to be made in the unbundled part of it, but then Spotify and others started rebundling it, and we now start seeing business models over there. Now, the reason I believe that this applies to financial services as well, and I don't want to overstretch the analogy, but to a large extent, what fintechs have been doing over the last 10 years has first been about unbundling financial services from the traditional bundle of the bank or of the insurer for that matter. And a lot of fintechs attacked specific functions of the bank and may not have captured a lot of value around it, but the few that did end up capturing value over the last several years have actually been rebundling. So if we look at companies like Ant, started with Alipay as the payments mechanism, and then rebundled lending, financial infrastructure, and a whole range of other pieces around it. We look at Square, started again as a payments player and has rebundled a whole range of small business focused services around that. And we recently heard of Stripe, which started as an API payments enabler, and now it's gone into treasury as a service, capital as a service, gone into various additional bundles around that initial use case of payments. So that's the fundamental idea that I think of when I think of the rebundling of financial services. So I'd love to understand from all of your perspectives. We have a very diverse panel here. I'd love to really understand, what does this mean for your business in your context? And I'd love to start with you, Mike, coming in from the insurance behemoth, the traditional insurance space. How do you see rebundling playing out as the future of where your business is headed?
Sanjay, thank you. I think it is where I would agree with I think what your thesis is. I think if you look at what we're doing, for example, with Pulse, you've got a 170-year-old insurer that in Singapore, a client would think of us as paying a medical claim in excess of existing government support or supplementing their retirement income. That's historically been our role. Now you have, as of I think yesterday, Friday, there was 14 million downloads of Pulse, which is a wellness app, artificial intelligence systems checker. It has digital payment capability. There's a blurring of these. And I think the theme that you're picking up is correct. There's, this is the well-rehearsed ecosystem sort of model where you can't be, one of my favorite words living in the UK in the last 6 years is they use the word precious differently than the States does, but you can't be precious about any element of your business plan. You have to follow the consumer's desire, particularly if you have expertise there, and you have to be open to partnering with firms that have capability that you may not be the logical provider of, because the consumer doesn't care who owns what piece of the value chain. They'll just find a better combination of services if you don't meet that need. So the next extension, for example, of our Pulse wellness platform is a finance piece, a financial wellness piece, because that's the questions we're getting most from their consumers, what they want next. And then embedded in that still, though, this traditional advice model, and I want the speed of a digital interaction. Singapore, for example, half of our consumers are still talking to their advisors now as we're talking now, even though they can meet in person. They like the convenience. So I think there's a real blurring, and I think what's driving it is considerations on the consumer's part and the regulator's part and the service provider's part that the consumer gets to choose. And that, the real skill question is, can you stay with the pace of their preference changes?
Great, thanks, Mike. That's really helpful. So a lot of it is around being consumer centric and then rebundling around the consumer rather than rebundling around your firm, and that resonates very well with how we've seen that play out in other industries as well. Tony, I'd love to understand from your perspective. You've started in the consumer industry, and now financial services is a big focus over there for you. How do you see rebundling playing out where you're playing?
Hi, everyone, and thanks, Sanjay, and thank you to the Singapore FinTech Festival. Look, I'm probably one of the greatest unbundlers. We started with an airline, and we unbundled everything from it, from food to baggage to seats, and brought democracy to pricing, i.e. if you didn't want food, you didn't pay for it. If you didn't want a better seat, you didn't pay for it. So we unbundled the airline kind of pricing model in Southeast Asia. And now we've gone to fintech services on the back of our airline data to create a fintech company. And like what you said, and what Mike has said, we started with payments. We've now gone to remittance, and we'll go into other products along the way: wealth management, potential insurance marketplace, lending. But just like the airline, very clearly segregated and very clearly priced. And so in our mind, where we may be different from a bank is a lot of those services are kind of amalgamated in. It's not clear on the pricing model, just like our airline. While we do have and are going to have a lot of different services, they're very clear pieces with very clear pricing and targeted to very specific people within our ecosystem.
Great, thanks, Tony. So that again highlights a really important point about the choice that unbundlers create, and then how you then rebundle that into experiences for the consumer. You're not.
Don't mind me saying that the one other point is simplicity. I think many of when we came into the airline industry, the pricing model was never understood. We see the same things in the financial industry, in terms of the consumer doesn't really understand all the products and what they're paying for. So we kind of put them into nice buckets.
Great. Thanks, Tony. Jorn, I'd love to understand from your perspective, how does rebundling play out for you? MasterCard has always been a horizontal player in the financial services industry, and it's a very unique position. Would love to hear what this means for your business.
Yeah, thanks, Sanjit. I think payment never really existed in another way. I mean, nobody wakes up in the morning and wants to make a payment. Payment is part of a commerce bundle somehow, right? You want to order food or take a taxi or go to a movie, and payment is just an element of that overall experience. And so it's always been kind of part of the fabric of what we do. And with digital coming of age, that has splintered, frankly, in many subcomponents. I mean, today, if you make a mobile payments, you may be on a Samsung device, on an Android operating system, on a merchant app with a bank authentication, and that's just the front end of that. If you then look what happens then behind the scenes, many different parties come together to make that experience fit for purpose, meeting consumer needs, and flawless, trustworthy, and the lot, right? And so for us, key throughout this entire thread is, as I believe Mike said, making sure that you're partnering with the right folks, and that's kind of a commercial partnership approach, but probably more importantly, making sure that you have the right setup and tools and sandboxes and what have you, in order to co-create with all these different players who want to meet their own business models, who want to serve their own consumers, but need to do that with in a bundle proposition with many parties along. And I think we've probably we have been doing that for the best of 60 years, but that's now moved to a whole different level, completely put on steroids. And our company philosophy is very much you survive in this digital age, not by building walls around your business model, but actually to break down these walls and to reach out, allow people to innovate on your rails, allow people to work with you in order to deliver the right propositions for consumers.
Great, thanks, Jon. There was something really interesting over there, which you talked about the value of openness and how it's always been there, a fundamental part of your business. And to that extent, MasterCard has been about financial infrastructure, right? So how do you see your role in financial infrastructure changing as we move into digital in a bigger way, as we start seeing players from other industries coming in? How does your position as that infrastructure provider, how has that transformed? How have the rails transformed, if you will?
Yeah, so I think this is a bit of a cliche, but the North Star here is to kind of make sure that you are serving your consumers, not owning consumers. Nobody owns a consumer anymore. You all have the right to serve a consumer, but serve the consumer for what the consumer wants to do in the way that is, in our business, secure and private, right? And that's kind of the North Star. And like I said, consumers want to be in different environments, want to do different things, and we have to just make sure that we're there too. We're seeing immense change around us, both on the front end. I mentioned earlier on the mobile payments, but on the back end as well. We used to be a card company, meaning people pay with a card and the underlying rails are card rails. With fast ACH coming to maturity in many countries, but with on the horizon cryptocurrencies and blockchain-based networks coming there, we need to make sure that we can serve our consumers. And that's kind of what I meant with being open for change, being open for disrupting yourself. Even if it may mean cannibalizing certain parts of your business, you'll never be able to win by putting barriers to what is fundamentally a consumer change, right? And so the rails we're now a company which is multi-rail, not a card company. We have still card in our name, like MasterCard, but nobody thinks of a book when you say Facebook, right? So we're not about cards anymore. We're about serving multiple rails, and so we allow the disruption. I actually encourage that disruption, both on the back end, how money moves, and at the front end, how consumer come into the ecosystem. It's been a very interesting journey, and where I've been always very intrigued in this is that what looks on the surface as competitive tension or as an enemy of our system, you invariably find areas of cooperation or areas where there's a win-win. This business or the transition to digital is not a zero-sum game. It's not like you have only winners and losers. I think if you build and co-create and think about how business models evolve, you find a win-win invariably. I haven't come across a partner yet whereby we didn't find an opportunity to make the cake bigger, to grow together, and to serve the consumers the right way.
Right. No, that's great. Thank you, Jon. And I really like the fact that you highlighted that across the value chain, you have those two positions. One is closer to the consumer. You can have that horizontal position and really aggregate consumer attention, and further away, the horizontal position around financial infrastructure. And that again resonates very well with where we've seen value accumulate in other industries as well. So I'd actually like to build off that. And Tony, I'd love to understand your perspective. As we move into rebundling, we're seeing industry boundaries go away. We're seeing anybody who has access to the consumer can now move across industries, can once they have that control point of that consumer relationship, they can start funneling a whole range of industries through that single bottleneck. So how do you see your move into financial services from that perspective? I also note that you have this super app strategy now. And so how do you see that whole consumer connect and using that as a bottleneck into to entering new industries? How does that play out for you?
I mean, it's an incredibly exciting time. And the same way for, 19 years ago when we started our airline with just two planes, the internet and this whole digital infrastructure enabled us to catch up with giants such as Singapore Airlines and Thai and Malaysian Airlines. So, we started with two planes. We grew to 245 planes. We're now back to two planes. But hey, we're going to rebuild again. It's like that snakes and ladders game, you get up to square 97, and then that snake brings you all the way down to 3. But we're still positive and we're still going strong. But the beauty of this digital world is that it has enabled us to do what you just said. Ultimately, as all the speakers have said, it's the consumer, and we have lots of consumers. We have fantastic data on the consumers. We know the consumers very well. They spend slightly higher because they've been buying plane tickets. And obviously, we have loyalty card systems that supplement that as well. And we obviously got very good KYC information. So I think one of the greatest assets an airline has is actually its data, but many have not really seen that or have given those out to third parties. We jealously guarded it over the last 18 years. I mean, I didn't see this data revolution, but I always wanted to keep the connection with my consumer. So I never let third parties deal with our consumers. We always had them direct relationships, no travel agents. We fought hard against OTAs, etc. And for the last 19 years, 80% of our business is still generated on our own channels, which has not been easy to do. So back to your question, as we've taken that data, we've spun off into a great logistics business. We think e-commerce revolves around great logistics, and obviously we have a large part of that for cross-border logistics to help e-commerce. And so we've taken a slice of that e-commerce through food and travel retail. And then we see e-commerce as another part of this whole enriching experience for the consumer, our consumers. And finally, the main part which you're asking me is fintech. Obviously, payment to me is one of the friction points for building a business. And we've been doing that for the last 19 years, dealing with payment. When we started our airline in the internet, most people in Southeast Asia didn't have a credit card or didn't have access to digital payment systems. So we had to be creative in building an airline that only sold on the internet. So we've always been very into payment. And we saw this whole digital transformation with the data we had. We thought we could create a really good fintech business around it. From the lending side, if you were to take on our business models, obviously an afterpay Klarna model, from giving extra liquidity. We also think there's a huge opportunity for the people that fly with us that are generally SMEs. So on the back of it, if you think we've built a business in the last 13 months, just in Malaysia, where we've now got 1.2 million customers with very little spend. Obviously, the initial offer was based on travel, that we would charge you very little on your currency exchange. In fact, zero. It was spot rate, so that became a very popular product. But now travel wasn't there. This product has continued to grow because of the ease of use. And now the extra products that we're bringing in, from remittance to lending, etc. So friction in the digital world, one of the main friction points is payment. So we thought it was a very natural extension. If you think of airlines around the world, most of them have subbed it out to banks or payment operators. And some of the biggest credit cards were actually airline credit cards up to this point. So we thought we'd do it differently. This whole fintech revolution and many of the great companies that are participating enabled us to have the confidence to go and build a quasi bank at the moment. And we're very excited that we built an airline for Southeast Asia. We built an airline for ASEAN. We carried just short of 100 million people pre-COVID. And we believe that there's a huge gap in the market for financial services, huge gap. Just like when I started the airline 19 years ago. I mean, I came from the music business. I knew nothing about planes. Maybe I still don't know much about planes. And so in the same way, I'm not a banker, I'm not a financial person, but I know what consumers want. And I know how to make it simple and reach the target audience. And we see huge opportunities because just like the airline industry, the financial industry is complicated. It's built on legacy systems. It has strange relationships with agents, etc. And so we feel that there's a real potential play, just like we did in the airline business.
Oh, that's fascinating. Thank you for tracing that whole thing. I used to be a regular AirAsia customer, and I remember when you used to string together the whole trip. If you just bought the flight, you get insurance, and then you book the hotel, and the whole thing gets rebundled. And now you've used that with the currency conversion to move into financial services. That's super interesting. I'd love to hear your thoughts on this, Mike, because when the consumer becomes or access to the consumer becomes the bottleneck, you have two great ecosystem strategies in play with both health and wealth. But you're also likely going to participate with your traditional business in other third-party ecosystems, because no single company is going to have all the consumer attention or consumer data. And so how do you think about protecting your business from commoditization when you go into a third-party ecosystem? We've seen so many examples of Amazon commoditizing merchants and Facebook commoditizing the news agencies. How do you see your traditional insurance play succeed in a world of rebundling, where you're now participating in third-party ecosystems as well?
Well, and before I answer, if you don't mind, I want to comment on something Tony said. So in new entrants, I could not agree with him more that one of the things most people don't understand, particularly about Southeast Asia and also true of our African markets, is the scarcity of payment capability. Right. So having his experience and understanding how to get people to pay for something, and that it's effectively financial inclusion, solving that. It's not just providing an exchange rate. And the other one that he has experience with that I think is unique for what we see, new entrants we rather compete with or partner with. Tony and I are going to do a deal right after this with the two companies. But I think he understands regulation, right? Tony's coming from a highly regulated industry, and financial services is a highly regulated industry. And I have a lot of friends, and including people who we normally be together at this fintech event, that come from a tech background that have never met a regulator, don't have any idea what regulation is. I've never, don't have software that can calculate business taxes. There's a variety of concepts that are true in the space that are prerequisites to succeed. So I couldn't agree more with his comments on what you need to serve a consumer in financial services. It's understanding that the logistics of it is key, and the logistics at the core is how can they transact with you financially. It's a social service, I think, as well as it is a business proposition if we get it right as firms. So you asked about traditional. So there's a couple of things that have to happen. So our the original man from Prue in the UK, when the company was founded almost 200 years ago, was famous for being on a bicycle, and they sold industrial policies for a halfpenny to a penny. They'd collect in person, and they would. The service was Friday. I heard stories that they would cash paychecks for people, because if you worked for a living in those days with your hands, or the banks closed early in the afternoon and you couldn't cash your paycheck, and sometimes they loaned money, and sometimes they were bookies, and all these things that a regulator now would say, oh my gosh, you can't do any of those. But the consumer, again, the people that tell me those stories when I'm in a taxi or something in London, they loved it because it was someone they trusted. It was someone who gave them time back. It was someone they had a relationship with that was, again, financial in multiple aspects. So the early history of what those people did was to solve for the consumer the way the consumer wanted to be served. What's changed now with advice is, so we've got the better part of 700,000 agents across Asia. and the consumer wants to interact with them digitally, in person, by phone. They have to be open, and they are open, and we have to provide the operating platforms that they can service that client exactly again as they want to be serviced. So sometimes that means, my banking relationship, for example, I have my core one. I have an advisor. I talk to him 3 times a year, and the rest I want to do online. It doesn't mean on something large I don't go to him for his advice or expertise, but on the day-to-day stuff, I want to deal with it myself at odd hours with my travel. And our business model has shifted to that, and the advice providers in our business, which is the agency models and the banks, they have to make that adjustment as well. It's what their clients want. The difference we've seen, and I'll pick on I'll highlight and I'll pick on our excellent firm, but one of our biggest competitors in China is Ping An, and very capable on tech and very capable on insurance, and an established player in that domestic market. And if you look at their public financial results, they've had some incredible technology innovations. The disproportionate amount of their traditional insurance comes from agency because it's a complicated transaction. And the consumer at that scale and for that sort of 20-year commitment is looking for advice still on it. But they may want that advice now through, again, this sort of meeting where it's digital, or they may want it a combination of them. And certainly all of us are using iPad-based presentations and material. Regulators want to see that we can show what the consumer was briefed on from a compliance and a quality of service point of view. And then again, that client may want to talk to an artificial intelligence based tech platform on text for service. So they may want to talk to a real person, or they may want to talk to their agent. And again, you have to make all of those options available if that relationship's going to go 20 years, because the one thing I think all of us would agree in this panel is, 20 years is a long time and a lot's going to happen, right? So there isn't if you said this is our model and we're sticking to it, you're one of the firms that goes away, and you're to be disrupted, and you won't stay with their consumers. So I think that's how we see it. The other tangent I would say on the bank channel, where we have relationships with banks all across Asia and Africa, and we look at a bank partner now. You look and say, do you think this bank is viable 10 years out, right? And certainly one of the questions is, what is their digital strategy, and does it align with what we're working on? I think it's hard to imagine a bank now. If you think of just Singapore as a market, there's some very innovative banking platforms, and I think it's a prerequisite for the exact same reasons. They're either going to own that space or they're going to lose that space, right? So for us as a partner, if we're going to commit to a tech spend and all the work that goes into designing things for a partner at that scale, we've got to believe that they're a long-term player. And so that's changed. That's probably more in the last 5 years that when we look at building a financial relationship with a bank, we have a digital lens as one of the first cuts.
Great, thank you, Mike. That's super interesting in terms of how a lot of the traditional assets still will play an important role as we move into ecosystems as well, even in terms of managing that consumer relationship that we're talking about. So Mike, I'd love to get your final thoughts, and actually all three of you would just love to understand from your perspective, Mike, if you had to say, what's the one thing that you believe is going to be the biggest driver for your business in the future, in this rebundling of finance space, which is still not well understood by the industry, or an opportunity that is still not well understood, but you have strong belief in that as being a big driver for you?
So I think without question, and COVID has accelerated this into in a lot of ways to our benefit. I don't mean to say that in a glib fashion, but it's your talent. So effectively your culture. So I need the same people that everyone on this panel needs. If we have a concept now called Go Live Friday, where something comes online that we've run through a hothouse and we've tested, and we have a new capability every week. Okay. Historically, insurers believe they had to own every ounce of the value chain. I could tell you stories of, I've been with the company a long time. We used to build cables if you wanted a printer cable. Is a true story. We didn't trust a Hewlett Packard to produce that sort of has to be manufactured here. So you need the agents of change in the organization. And the talent that is willing to do that is the same talent that every firm that's been mentioned, on this panel wants, and everyone in this audience wants in their company, right? So if you're going to recruit those people, if those people are going to stay with you when you have them, it goes to culture, values, the purpose of the firm. Can they look at what the company does and say, I'm making a difference or not? And what's it like to work there? And do they have, authority, and do they know they're making a difference? And that's a competitive advantage if you have it, that again requires tremendous investment in time and energy and passion. But it's also, I think, the hardest thing to protect and the most important thing to grow. And so I think, obviously with our pace of change, I think we have that now. And I think there is when an investor looks at us, they look at our back book, our existing clients, is massive, and it's incredibly profitable. And if theoretically, it's not even theoretical, if we did nothing, right, we would be very profitable and our earnings would grow. But it's not a sustainable business model to do nothing, right? So the really key piece for us is the front end, the innovation, and that comes down to, the systems are available to anybody, right? It comes down to how those tools are used and the creativity of people. So I think that cultural piece, people, it's hard to test, so they don't value it as highly as we do. And we think that's the key. And again, I think it's the most competitive piece of the business model.
Yeah.
I think firstly, completely agree with what Mark just said. But I would also say we are in fintech, we are in financial services, we are entrusted with the wealth and the money of families and real people, right? And so I think unleashing innovation in a responsible way, in a way that doesn't lose the trust of people, is crucial. And I think Mike hinted at it. Regulators are extremely important in that, right? And so being able to work with regulators who, by the way, are very much forward-thinking, who want to embrace change, but want to do that in a way that again, it doesn't put the population at risk, I think is crucial. We haven't seen nothing yet, right? With 5G coming at us, with IoT coming at us, with cloud and edge compute, with blockchain, we've only seen the tip of an iceberg here in terms of innovation. And so working with regulators on sandboxes and all that, and back to the culture, making sure that we have a drive for innovation, but in a decent and responsible way, and not by siphoning off data in order to, in an untransparent way, use it somewhere else. That's just not the way that you render a service to consumers, right? And so it goes back to culture, talent, but also an openness to work with people like regulators in order to change things fundamentally, but in the right way. And financial inclusion is a huge topic within that, right? Those are the people that, frankly, we need to bring into the financial ecosystem. Again, they may not have an identity. They may not have a credit history yet. Very important that we help those economies to thrive and not create an even bigger divide in society as a result. So to me, it goes back to indeed talent, but also decency and responsible innovation out there.
Thank you, Johan. Tony, your thoughts on this?
Yeah, I think the biggest thing people don't understand about AirAsia is basically our ability to understand the consumer, and the ability, the normal thing is to say, you're an airline. How can you be in fintech? How could you be another Grab or Ping An or whoever? But I think it fundamentally comes down to what I said at the beginning, understanding your consumer and giving them the right product. That's what we did at AirAsia. And it's about inclusion. When I took over, when I started AirAsia 19 years ago, only 6% of Malaysians flew. And that was a statistic that really got me into this business. Similar in the fintech business, if you to look at all the financial products, from insurance to lending to accessibility to funds to wealth management, the percentage of those actually receiving those services are very small. And so that is what I'm after. I'm after inclusion. I'm after value. I'm after giving people a product that they want and understanding what they want. And we've been at the really sharp end of the business in the airline business because, as Mike says, we know regulation. But on top of that, we've been competing against airlines that are traditionally owned by governments that have done their best to put us out of business as well. So we have won because we've understood the consumer. And I think many people underestimate us because they think we're an airline. But we've been in the digital business for the last 19 years. And the most important part is understanding that consumer, getting the product right, and keeping it as simple as possible. It's exactly the same principles that we've done, whether it's food delivery, you know, how many deliveries you can get in an hour, whether it's giving value to someone traveling and making sure they're not overcharged on exchange rates. It boils down to the same thing: value, understanding the product, and transparency and simplicity.
Great, thank you, Tony. Thank you all. A lot of interesting interconnections over there. So consumer focus is the key to winning with rebundling, and getting that right is all about trust, as you mentioned, Jon. And bringing that together, what the organization needs to do is have that culture, that the ability to retain talent, to use innovation as a way to retain that relationship with the consumer. So with that, we're almost on time, and we're coming to a close to this panel. Thank you once again for all of your time, for taking time out from your various time zones to make this happen. And we'll be waiting from the sidelines to see how all of these strategies play out as you move forward. Thank you once again for your time today. Thank you.
Thank you.
Thanks very much.